Welcome. I hope you're all doing well out there, staying safe. Uber investors struggled to grasp its Q4 earnings, reflecting the company's uncertain road to profitability. Let's jump in. As we know, this company still has not shown a profit since the day it started, and they seem to move the bar every year. Oh yeah, 2021 it'll become profitable, 2022. 2029, you never know. Uber's after-hours stock movement Wednesday highlighted uncertainty around its Q4 earnings report. Uber beat on earnings but fell short on revenue as food delivery failed to offset ride-hailing losses. Uber must navigate a long list of unknowns to overcome the pandemic and become profitable. So let's check it out. I love the Business Insider stories, always great. Uber reported its Q4 2020 earnings on Wednesday, and its mixed results highlighted the uncertain road ahead for the company, which has yet to turn a profit in its 12-year history. Uber beat Wall Street's earnings expectations, losing 54 cents per share versus estimates of 55 cents, but it fell short on revenue with $3.17 billion versus an expected $3.58 billion. Wedbush analyst Dan Ives told CNBC on Wednesday that Uber was the poster child for a recovery play, while Morningstar's Ali Mogharabi told the network that in terms of the top line, there's so much uncertainty there. On Uber's earnings call, investors pressed CEO Dara Khosrowshahi, one of my favorite CEOs who doesn't take care of his drivers, and other executives about everything from post-pandemic travel trends to the company's ongoing fight to keep drivers classified as contractors, to whether and when the company will be profitable. Uber shares rose and fell multiple times before settling down nearly 5% in after-hours trading Wednesday. By midday Thursday, the stock was down 2% after some early morning turbulence. All businesses face some level of risk and uncertainty, but investors' wide-ranging questions and the initial struggle to process Uber's earnings report showed the best way forward for the $117 billion company is far from clear. Here are a few aspects of Uber's roadmap that investors are trying to wrap their heads around. The future of food, rides, and travel. Uber food delivery revenue jumped 130% year on year, but it wasn't enough to offset the company's pandemic-stricken ride-hailing business, which remained down 50% year on year, even as it rebounded slightly from Q3. As the pandemic forced consumers to switch up their habits, Uber doubled down on the success of Uber Eats by acquiring Postmates and Drizzly, while jettisoning its struggling autonomous vehicle research, flying taxi, and e-bike business. But the future of Uber's ride-hailing and food delivery business depend heavily on how quickly the US and other countries are able to vaccinate people and drive down COVID-19 cases, and whether consumers return to their old habits or stick with new ones. There's still a question as to whether or not the strong demand for online food delivery is going to last even after the economy recovery. As for Uber's rideshare business, while public transit faces an uphill battle getting riders back safely, car ownership rates have surged during the pandemic as millennials and Gen Z move away from cities and more companies embrace work-from-home policies. Some travel industry executives like Airbnb CEO Brian Chesky have predicted that businesses travel won't ever return to pre-pandemic levels, but Khosrowshahi told investors he believes external business travel, such as salespeople flying somewhere to land deals in person, will bounce back very quickly. Even though the number of users on Uber's platform dropped by 16% in Q4 2020 from the previous year quarter, it's making more money from each of them. And Khosrowshahi repeatedly touted Uber's membership growth to 5 million members worldwide. Still, the sheer number of variables make it difficult to tell who will jump back on Uber, when they will, how much money they'll spend on Uber's various services, and whether the company can ultimately figure out how to make those services profitable in the long run. Now with these, I want to add to this, with these super low car interest rates, a lot of these people that did not want to get into Uber vehicles during the pandemic because there could be 20, 30 passengers in that car per day. It would be a disaster getting into that vehicle. What they've done is they've gone out and bought vehicles. If you've bought a new vehicle, you've committed to 4 or 5 years of financing. So a lot of those people will not be returning. That's my prediction. Huge shout out to Cover, Kover, the gig protection plan for the gig industry. Starts at $7 a month. All of these companies are represented there. In case any of these companies wrongfully terminate you or deactivate you, they have a phenomenal legal protection plan. And again, as I mentioned, it starts at $7 a month. You can ask any questions there on the homepage. By the way, the link right beneath this video, right now, if you lock in one